Are you sitting on a wealth of potential in your current home and wondering, can I borrow money against my house to buy another property? The answer is yes, and you might be leaving a golden opportunity on the table if you don't explore this avenue. I'll talk you through your options in this video. Borrowing money against your house to buy another property is more common than you might think, and it's done through remortgaging or equity release. Before you make any moves, it's crucial to understand how much you can borrow and how much it'll cost without hurting your credit score. So why might you want to do this? Well, reasons can vary from turning your home into a buy-to-let property, purchasing a holiday-let property, buying a second home, enabling a let-to-buy, or even buying a home for a friend or a family member. Let's talk about remortgaging first. This involves calculating your home equity and considering associated costs like arrangement fees, valuation costs, and legal fees. It's always wise to seek mortgage advice from a broker when you're doing this. Now, if you're over 55, you might want to consider equity release. This option offers more flexibility and a no negative equity guarantee from ERC-approved lenders. When purchasing a property as an investment, you'll need a buy-to-let mortgage, which typically comes with higher mortgage rates and fees. If you're thinking of purchasing a property overseas, make sure to research taxes and regulations in the respective country. Now let's talk about the elephant in the room, the cost of a secured loan. For example, a 30 grand secured loan at 4% on a 15-year term will cost you £221 a month to pay back. The same loan at 5% will cost about £18 more per month, adding a whopping £2,960 more over the entire term. So make sure you do your maths. If you're considering remortgaging, it's essential to understand the concept of home equity. If you own your property outright, the equity is the full value of your property. If you have a mortgage, subtract your remaining mortgage debt from the property's full value to get your equity. Always make sure that you factor in all the costs, including potential early repayment or redemption fees. For senior citizens, there's an option of a retirement interest-only mortgage, or RIO, that's what they call it for short. In this case, you only pay the interest until you pass away or you go into an old age long-term care, after which your property is sold off and your debt is considered paid. Equity release is another option if you're over 55. This type of lifetime mortgage lets you access the equity in your current home as a lump sum or regular income without needing to sell it. However, this is subject to your credit rating and how much of your mortgage you've already paid off. The beauty of modern mortgages, especially those offered to older citizens, is their increased flexibility. You can choose to make regular interest payments, access funds in stages, or all at once, and even protect an inheritance for your children and other beneficiaries. When looking for equity release providers, make sure that they're authorised by the FCA, that stands for the Financial Conduct Authority, and that they belong to the Equity Release Council. This means that you're protected throughout the whole process. Let's talk about buy-to-let mortgages. For this, you'll need to show the likely rental income of the investment property and prove that you can afford the mortgage repayments. Keep in mind that these mortgages typically require a larger down payment and come with higher rates and fees. So, can you buy a property in another country using the equity in your home? Absolutely! This could be an incredible opportunity for you to own a holiday home abroad. But remember, it's crucial to research the tax implications and the regulations in your chosen country to avoid any unexpected surprises. Now, you might be thinking, is it wise to remortgage or release equity from my current property to buy another one? It might seem daunting, but it's a common and often lucrative strategy that many landlords and investors use. The key here is to do your research thoroughly and seek expert advice before making a decision. The property investment world is vast and varied. There are plenty of lenders out there with competitive rates and flexible policies. It's up to you to find the one that best suits your needs and financial goals. Remember, the wealth that you've built in your current home can be the key to unlocking your next big investment opportunity. Don't let the fear of the unknown hold you back. Start your journey, do your homework, and seek professional advice to make the most out of your property investment journey. So why wait? If you're interested in finding a loan for your circumstances, simply click the link below and fill out a short form. It contains a few questions like whether you're a homeowner and how much you'd like to borrow. Then it'll give you access to quotes from all around the UK tailored to your circumstances. It's totally free, of course, and it won't affect your credit score. Click the link below and fill out the short form to give it a try.